In the heart of India's bustling financial markets, a storm brews. The winds of change, fueled by the 24 elections, have swept across the trading floors, leaving investors in a state of uncertainty. The Sensex, once a beacon of optimism, now stands battered, down over 5% for the day. The Bank Nifty, a pillar of stability, has crumbled, plummeting 7%. And those once fancied PSU stocks, well, some of them have tumbled more than 15% in a mere 24 hours. Uncertainty regarding policy changes and potential shifts in the political landscape make investors jittery. This uncertainty often translates into market fluctuations with both upward and downward swings. The post-election period can be equally unpredictable. A stable government often brings a sense of relief, leading to a market rally. However, an unexpected outcome or a weak coalition can prolong the uncertainty, pushing the markets further down. As the dust settles, investors grapple with a critical question: should they buy or sell amidst this raging storm? Let me share my perspective. India has gone through this many times before. Coalition governments, delicate balances, and reforms that tiptoed through political minefields. The NDA and UPA eras witnessed transformative changes despite the odds. So, my friends, consider this market plunge not as a fall from grace, but as an invitation, a gradual opportunity to invest wisely over the next few months. Finally, remember this: storms pass. Beneath the thunder, seeds of growth take root. This election result, seemingly chaotic now, may well be the compass grinding us towards better shores.